Very good afternoon from London. Welcome to the RANsquawk Weekly Wrap. It's been very quiet in terms of market volume this week, so I'm going to focus on the key driver of the markets, that is the Eurozone crisis. Taking a look then firstly at the currency space, with euro-dollar falling 400 pips Monday to Friday this week. Elsewhere in the equity space, we've seen not as bad a reaction as some may have predicted for the equity space, and particularly in terms of the financial sector. Apart from individual cases such as Crédit Agricole issuing a profit warning for this year, the equity-based space has been somewhat resilient this week despite the illiquidity. Already seen at least one occasion the financial sector being the best performing on the European equity cash close on one of the days this week. However, many market participants focusing on the EU summit, the impotency there of the Eurozone leaders being dragged into the market sentiment this week, particularly affecting then Eurodollar, as mentioned, falling 400 pips this week. Many market participants also speculating of a sovereign downgrade. We've had some Standard & Poor's comments or market talk regarding Standard & Poor's coming out today of a possible sovereign downgrade of Italy and Spain, which wouldn't be unsurprising. More focus coming onto France. We haven't had any market talk regarding France. However, their sovereign is under pressure, particularly in regards to the ramifications for the EFSF. If France is to be downgraded by Standard & Poor's, and likely the knock-on effect will be actions taken by Moody's and Fitch, Standard & Poor's have already noted that they will change the EFSF's AAA rating to match that of the downgrade of one of the AAA rated nations in the Eurozone if that does take place. So look at the impact that will have for the EFSF, which already have announced today they will tap the bond markets in January for their rescue programs for Ireland and Portugal. If it loses its AAA, these bailout bonds may not get sold with a particularly susceptible or attractive yield there, and we may see the bailout programs for Portugal and Ireland come under some jeopardy. And we are looking towards, therefore, the ECB to come in and save the situation. They have already rejected funding the IMF themselves directly, and we're therefore also looking for the IMF, and we've already had comments, particularly from scepticism then from other countries contributing to the IMF, such as the US, Brazil and Japan, and therefore putting more pressure onto the ECB and looking towards them to become the lender of last resort that they need, with particularly the balance sheet that the ECB has, to try and support and actually end this crisis. The ECB does seem to be reluctant to do that. They have announced then, and all the focus comes to the 3-year allotment for next week, which has been announced and which is gaining market focus hour by hour. Will the banks put under pressure actually come and tap the ECB for funds for the attractive 3-year rate of around 1%? They're putting under pressure to do this. It helps the sovereign countries. We've already seen Spain today. The 10-year sovereign bond spread over bunds tightening quite significantly, as market participants are speculating that the banks are buying Spanish bonds in order to use as collateral for this ECB 3-year facility. That remains unconfirmed, but it is out there, and we're looking then for the banks next week to use this facility in order to inject capital back into the markets and somehow get the Eurozone off its last deathbed. But we have to see that, and we're looking then for this 3-year allotment next week. It becomes very much market focus. In terms of the illiquid markets, we could see a large reaction as markets participants do die out towards the end of the week. Just look for those market moves. Otherwise, it's been very nice providing the video and the squawk for you indeed this week, and as we end up to the end of the year. Hope to see you bright and early on Monday. Otherwise, do have yourselves a good trading day, a good rest of your weekend, and a good trading week next week until the new year. But that's enough from me. Have yourselves a great trading day.